You're listening to the Investor Success Podcast, the hit weekly show featuring inspirational stories to help real estate entrepreneurs do more deals while increasing their cash flow and their net worth. My name is Jim Ingersoll, and I love being your host of this podcast each and every week. I'm also the founder of the Investor Success Coaching and Mastermind. You can learn more about that at investorsuccessmastermind.com. I created this podcast to help motivate and inspire real estate entrepreneurs to take massive action and build your business and your life the right way. I want to thank you for joining our show today. I also want to thank all of our regular success listeners. Hey, can you guys that are regulars do me a favor? Go to iTunes and leave a review for this podcast, please. They help so much more than people ever realize. Hey, and if you're brand new to our show this time for the very first time, I want to encourage you to hit the button and subscribe to this show as well, because we've got a phenomenal show lined up for you today. It's going to be full of lots of strategies, some stories, and some really important things that you've absolutely got to get right when you're investing in real estate. And today my special guest is also a friend, Mark Jackson. Let me tell you a little bit about MJ, as all of his friends know him as. Mark Jackson, fondly known as MJ, has also became the go-to valuation specialist for people who want to achieve more in real estate investing. In 1999, MJ founded an appraisal company and soon after found the true gift for analyzing property values for real estate investors. Once MJ began investing in himself, and that's a critical piece, the floodgates just opened wide open for him. Since the year 2000, MJ has been able to close many real estate transactions totaling in the millions of dollars and maintains a very substantial net worth. He created Investor Comps Online to help investors like all of us do the exact same thing. And since 2006, real estate investors both domestically and internationally use Investor Comps Online on a regular basis to confidently profit every time you buy a property because you know the right price before you buy it. Mark has spoken on the topic of real estate valuation across the U.S., the Caribbean, Monte Carlo, Italy, Switzerland, Scotland, Australia, Japan, and Africa. And most recently, MJ has began teaching students to successfully bid on and wholesale government HUD houses. MJ, welcome to Investor Success today. I really appreciate your taking time out of your day to join us.
Oh, man, it's an absolute pleasure, Jim. Just feel very fortunate and grateful that you've invited me to be on.
It is.
When I say grateful, I mean in the highest form of gratitude, without a doubt.
Well, I really appreciate that. And you were just telling me before you jumped on the show, you've got deals going in the pipeline here all over the place, right?
Yeah, we're fortunate. Again, where to whom much is given, much is expected, and expect a whole lot out of me. Thank you very much. Just again, you're right. I mean, we're sharing, knocking out 3 closings, projects actually coming off of the books that have only been on the books about 7-8 months. Renovations, rehabs, and then selling one in Florida that we acquired, and then actually picking up 2 more in Florida in the Tampa market. So got another one that's closing at, I guess the time of this recording, another week up in Mount Pocono in Pennsylvania. And then another project just outside Philly in Swarthmore, and just having a ball. It's when you're taking a valuation first approach to real estate. What I mean by that is looking at not just what a house is worth, but you're looking at what is the acquisition value? What is the actual amount that you should be paying for that property, and then carefully analyzing the after repair value. That's taking a valuation first approach to real estate. And I've told this idea to people over and over and over again, because what it really boils down to, Jim, and you're very familiar with this, regardless if you're doing a pre-foreclosure, a subject to, a HUD property, if it's a short sale, I mean, if you've got a probate, if you've got a motivated seller that somebody responded to on a card, at some point in time, regardless of all the negotiation skills or what you're going, if it's a 3-bedroom, 2-bath, 1-bedroom, 4-bedroom, $1 million house, land, whatever the case may be, at some point, you've got to determine what should I pay for this and what can I remarket it for? That is always going to come up. That's the one thing that's without a doubt consistent in every transaction. And through Investor Comps Online, we help people to be prepared for that one question so they don't have to depend on someone else to tell them the value. They know for themselves. And that's been the biggest reward of my appraisal career and creating Investor Comps Online, is giving folks that complete sense of control and confidence that they can take a valuation first approach to every deal that comes across their desk. That's what I get excited about.
And yeah, and so do I, because when I talk about investing the right way, if you screw up your comps and you don't know what you can pay for a house, and a lot of investors are probably paying a little too much right now, in my opinion, you can get behind that 8 ball pretty quickly.
Yep. It's true. It's true.
So you've got to get that part right. It is absolutely critical on the chain to success.
And I can give you a really great example. I've shared this before. And this goes all the way back to pre-recession. In 04, 05, 06,
yep.
I acquired a number of properties at that time subject to, you had people that were being transitioned out of work, values were still good, they had been paying on their mortgages, so they had equity positions in their homes. A lot of first, maybe second-time home buyers, stuff like that. So we were able to acquire those properties with the existing financing in place and then be able to remarket them as lease options. Able to identify folks, put them in there. We didn't have to worry about having to leverage the credit in our name, stuff like that. And we also did a bunch of HUD houses as well. It was well before the HUD home store, but again, listen to the time frame, 2004, 2005, 2006, great time to be acquiring because values were still essentially holding, and then you had good equity positions based on where you were acquiring. But again, taking a valuation first approach. In this one county where we had about 34 houses, the school board lost its accreditation.
Ooh.
Elementary, middle school, high school in particular, you got kids coming out trying to apply to colleges, and their school has no accreditation. Tremendous impact. And it wasn't the teachers, it was actually the school board members that were not behaving correctly. So here we are, all these houses on lease option, people, wanting to buy, and then they're like, I've got to move. I can't keep my kid here because they're not going to be able to transition into high school and college, so on and so forth. So what happened was all those properties, we had to immediately shift to market and housing authority rents. We were no longer in a position where we could resell. But because we took a valuation first approach, we never over leveraged anything, whether we had credit partners, whatever the case may be, all we did was transition to rents, and we were fine. We didn't have any challenge at all. And even a number of those homes through 2007, 8, 9, 10, 11, 12, a number of them, we've accelerated mortgages, and those subject twos are paid off. So now we have them free and clear. But that's the uniqueness of taking a valuation first approach. You can't stress it enough. But that's a perfect example, even for someone that is in investing and certainly watching the market areas and looking at, what are the places of worship? Where's the ingress and egress points? What are we looking at in terms of commercial development? What's maintaining the tax base in the market area? Who would ever think that a school board would lose its accreditation would be the thing that would impact your market area? But if you buy right, you can withstand anything. You just don't want to be in a situation where you get so excited that I've got a deal, I got to get this one on the books, that you don't take the time and effort to make sure that your valuation is right and you can bring that property on the books. And if you need to shift, move, go and get a different deal method out of your tool belt, and you want to have as many tools in your tool belt as you can for your real estate, that you can adjust without having any real impact to that transaction. But that's not what everybody does. And you know that as well as I do.
Yeah, and I think right now people are getting a little sloppy on their valuations personally because the market is so forgiving, especially a lot of people are flipping retail. And it's like they can get a little bit sloppy. Like they can go over budget on their rehab a little bit. They can, their contractors can stretch out their timeline just a little bit. And in some cases, when the timeline's stretching out a little bit, they find out the house could be worth more at that point than when they bought it. So I feel like prices are going up, and it's creating this mentality in investors that it's okay to be a little bit sloppy. But these markets can turn back the other way also. And I had a lot of friends that were flipping right before the last recession. They absolutely got stuck on their inventory because that happened. So valuations do matter. And I'm glad you're so passionate about them and teaching people about them, because you've got to spend the time and do your due diligence to get those things right.
Yes, absolutely. And even while you're looking at valuation, we teach really from an appraiser's perspective, almost like essentially what we refer to as an investing appraiser. We want everyone that uses an investor comps line to be a valuation specialist, as we say.
Right.
And the idea is to look at what are the different dynamics taking place in the market area? Where are the jobs coming from? What is the education level? What are the population rates? What are the trends that are happening in that market area, not just right now, but are being projected? A good way to do that is actually communicate with the zoning office and find out how many new building permits are being issued, how many are just sitting on the books and not being built out. What's the potential activity taking place in a residential around the unit that you're trying to acquire, not just in general, because valuation will jump. We know subdivisions are market areas unto themselves. Neighborhoods are market areas unto themselves. You and I had a great conversation about 5-6 weeks ago talking about that market that is just east of downtown. I don't recall the name. Say it again. There you go. That is one specific pocket that is going to be a different dynamic than something just north of it above. I think that's above 64.
Right.
95, 64, that's a completely different market area. So we've got to be looking at, as we care and share and teach and put this information out for folks, that they're in a position where they're always looking at not just the one house they're doing, but the market area around it. One of the things we teach in terms of doing value is when you're going to that house, make sure that you come in from one direction and don't just turn around and leave and go out the same way. You want to drive out the other side of that neighborhood. Look and see what's taking place. Even if you're familiar with the market area, say, oh, yeah, well, I used to go to school over there, or I got a family member, or even if you have an affinity for that market area, you'd be surprised. We all are at times when we drive different ways to see, has the adjoining neighborhood gone up? Has it gone down? Has it stayed the same? Each one of those has a different valuation impact in terms of the churn rate and just the overall dynamics that are making up the demographics and cost points in a particular market. And now, those words may sound like, it's a lot of work. It's not if you're really on the ground and looking at the comparable data like we do with Investor Comps Online, so you can actually see who the buyers and sellers are in the market area. In 2007, 2008, 2009, when we were pulling comparable reports, it was stunning the significant change that either a property was being foreclosed around the deals that we were investing in, or it was being bought off the books from the bank, and the bank was letting them go like nothing. I mean, you could get houses so discounted. But it was challenging because the number of arm's length transactions taking place were at a minimal. They were very, very few in some of these different market areas across the country, whether we were in Pennsylvania, Connecticut, Maryland, Virginia, North Carolina, South Carolina, Florida, Tennessee, Ohio, Illinois, even to the West Coast. It was challenging to actually identify in some of the more populated market areas to find those arm's length transactions. Now, coming into 2011, 2012, 13, 14, now we're starting to see the majority of the transactions are arm's length. Jim selling to MJ. Okay, we're actually doing transactions, and fewer essentially REO transactions, or they weren't the dominant factor when we looked at a pool of comparables in market areas. And we were glad to see those arm's length transactions, and they have helped increase the market value, bring prices back up. Even Las Vegas is where it was projected would be some 22 years before they recovered all their value. Right. They're almost I think they're right in the low 90 percentile now, but that's also a sign. That was one of the areas that was most heavily hit by the recession and the collapse of the housing market. Now, the one thing they didn't have was a lot of fraud. There were other market areas that you had investors, right, for lack of a better phrase, right, that were not only were they pushing the values, but they were in a situation where they were they were working with the mortgage brokers and the appraiser, and the broker to just really just create a value in the market. So not only were the values increased, but then they were just flat out fraud as well. So Vegas just had a whole bunch of people going to buy, and then a whole bunch of people lose their jobs and couldn't afford their mortgages. But they took a huge rise, a huge collapse, and actually, surprisingly, they've recovered in almost like half the time, almost like 8 years rather than what was projected to be 16 or even 22.
Personally, I'm wishing I would have bought in Las Vegas half a dozen years ago.
Yeah.
Really,
yeah.
Because you could have cleaned up. So if this happens again, I'm going West Coast.
Thank you.
And I think San Francisco is another one. I mean, it's sort of like the bellwether for the country. And they are going up. They've gone up really fast the last 12 months. So I think people in that area probably better watch closely, because that's the first area in the country that I think sort of starts to turn.
Jim, it's stunning. If you're not, for not being familiar with going into different market areas, I mean, you're talking about going to San Francisco, whether you're predominantly, obviously, on the west side of the bay, but you're talking about going there and looking at a 1-bedroom, 1-bath flat that might be 700 some odd square feet. And this is a flat. You're actually going to own this thing, and you can't touch it for $1 million. Now, back in 2001, you couldn't touch it for $675,000. Okay. Those numbers pretty much stayed flat, kind of regressed some. And now, of course, they're just off the charts. But that's the price the market will bear based on the individuals that desire to live in that market area. Right. You've got teachers that essentially are in the education field that will drive an hour and a half from Concord and other areas across the bay to come teach to the kids in the city, because they literally cannot afford, based on their incomes, to live in the Bay Area. It's dynamic, and it's going to have its, trickle down effects over time. We'll see how much of a let's say bellwether it is in terms of how that impacts the overall market area. But there's a number of things that are still happening. Like, as an example, in Chatanooga, Tennessee, they have built there almost a decade ago. They brought in Volkswagen, and Volkswagen has been very successful in the U.S. in terms of the product they put out, reliability, and so forth. But we know almost 12 months ago, they got hit, not 12 months ago, maybe about 8 months ago, they got hit with this revelation that they were doctoring the sensors on their diesel engines, having better readings or better mileage than what they were actually purporting. Well, here's the thing. Volkswagen, to their credit, has gone ahead, owned up to it, hasn't said, no, it wasn't us, that type of thing. Right. And that dynamic here in the U.S. is seen as, well, we don't really need to beat them up. We're definitely going to sue and get some money on them, but at least they're being honest about it. So as it turns out, that plant, while it had a modest slowdown, now has actually opened a leather plant. They're doing some other seat manufacturing, engine manufacturing right there in Chattanooga. That market area is going to continue to be strong, given the dynamics of not just that one industry, because they have 2 or 3. They've actually worked on their downtown as well. But while I had reservations and concern, I was watching that very closely because I'm doing deals in Chattanooga, Tennessee, right, on the heels of the success that Volkswagen is having. When that news came out, man, I'm telling you, the air was let out of my tire.
Well, Tell us a little bit about Investor Comps Online, because everybody needs to go to Investor Comps Online and check it out.
Absolutely. So Investor Comps Online is a platform that allows people to jump in, grab a subscription, and be able to look at data in their market area wherever they are. We have data in all the major market areas across the country, including Alaska and San Juan and Guam and Hawaii and stuff like that. So you can actually look at and see by searching either by the address, the tax ID. Sometimes you need to search just based on an owner's name, an entity, a LLC, a trust, or maybe you just happen to meet somebody, you know their name. You can't remember what house they told you, but you remember their name. So you can look up the property by doing an owner search. And you can also do a problem address lookup. Once you've got that property report, you're looking at all the pertinent data, census tract information, legal description. You can tell if it's an absentee owner, if the person's living in the house, or if the tax bill is going somewhere else. Then you're looking at the legal description, everything you need to do to create your warranty deeds or your agreement for deed when you're working on your paperwork. Then you get into what is the detail about the subject property: basement, not a basement, driveway, pool, not a pool, on a crawl space, is it frame, is it concrete built, what's the square footage, what's the year built, what are the room counts, all this pertinent data that you need to be able to look at a snapshot, whether you're on your iPhone, your Android, your iPad, if you're sitting at home, if you're on a flight somewhere. You can just pull up Wi-Fi on the plane and be looking up and analyzing a deal that may have come across you as you were getting on your flight or whatever. In addition to that, we look at what is the prior transfer history. How much did Billy Bob pay for the house 3 years ago when he got it? What was the principal amount of his mortgage? You can really get a wealth of information about even a second mortgage that might be in place. From there, we provide a market area analysis. How many homes have been sold in the area? What's the highest, the lowest? What's the average year built? If the project you're looking at was built in 1979, you really want to see if, in fact, the most recent transactions are also homes built maybe between 1976 and 1980. If you see that the average or the median homes that are being built are now 2,000, that tells you you've got a dichotomy to deal with or some adjustments to make on that property when you're talking about valuating it. Then after that, we've got a wonderful, you'll typically get anywhere between 15 to 20 comparables that are used on an algorithm to capture information about comparing to the subject property. So you really get data that's going to help you identify your acquisition value and after repair value. Keep going down the report. You've got a wonderful market area analysis. How many houses sold and what price range? There's also every house that's on the same street. You'll have all the tax records and assessed values for those properties. You'll need to know if it's in a flood zone, if it's in a rock slide zone, a mud zone, if there's any hazardous waste sites nearby, if there's any EPA conditions. All of that data is in your Investor Comps Online report that we provide. I again, worked with a data provider, compiled it, put it all together so people can look at data the same way, and if not better than an appraiser would do in one snapshot all in one place. So we provide a couple different packages. You can do a one-off, you can get a bundle of comparables, and then we have our support desk, because I believe that people need to be able to say, hey, I've got this house, it's being offered for so much, here's some data, here's some pictures, here's a listing. I can't figure out the value, can you help me? That's what we have our support desk for. And so we have people in different time zones. So we're always able to help folks get the data they need, the support they need. And on top of that, there's a tremendous knowledge base on there and a wealth of downloads, our teaching, training. We have a valuation adjustment worksheet. And this is so important because even as you're looking at your data and you're getting smarter and smarter about your comparables, it's one thing to be able to say, okay, here's my subject property. It's got 3 bedrooms and 2 baths. But all my comparables are either 3-bedroom, 1-bath or 3-bedroom, 3-bath. How do I adjust for that bathroom? Well, on our valuation adjustment worksheet, we give you the value if it's a house between $50,000 to $100,000, between $100,000 and $175,000, and then $170,000 and up. We can tell you what the value of a bath is, a HVAC system, a garage, any number of different comparables that might be slightly different from your subject property to the comparable, and that way you can make those adjustments and know, all right, this is what I need to pay for this house, and this is what I can market it for.
All right, so that leads me to my next question. A lot of people are really having a great year fixing and flipping houses, and they're looking to figure out the right things to do inside a house to add the right value, right? So,
Yes.
you look at your kitchen is important, the number of bedrooms, the number of bathrooms. What kind of trends and input do you have in those regards for those flippers out there rehabbing houses right now, looking at a house that looks like a hot mess maybe, and they've got to fix it up and resell it? What are the value add pieces that provide the biggest bang on the buck this year?
Well, overwhelmingly, it's definitely going to be as a tried and traditional thing. Yep. Kitchens and bathrooms make all the difference in the world. Okay, if your market area will allow you to put in or calls for, because not every market area calls for this, but you have two steps you can do. There's market areas that will do looks like stainless steel and be very satisfied with that at certain price points. And then, of course, stainless steel is a great material. The other thing when you're doing kitchens is if you can put in a nice backsplash. Glass mosaic tile is very, very inexpensive. You can get sheets for $4.99 these days. And it's actually even I could install it. So, so that's something to add in. You can do a looks like granite Formica countertop and pull up a mosaic glass backsplash.
It looks nice.
And it looks nice.
We've done that. There's one we've used quite a few times. It's called Black Star Granite for our listeners. Works very, very well. And then with that backsplash on, looks really good. And then what about granite? Granite sells, doesn't it?
Granite sells. Quartz is doing very well right now. It used to be corian, but quartz, you can get quartz still now for under $20 a square foot. And it will bring you tremendous value. Just be mindful of what type of property you're putting it in and at what price point.
Because it is more expensive than granite.
It is more expensive than granite. Absolutely. Yeah. But I will say, Floor & Decor still does a really great job. They do pre-cut slabs at 112 inches, and they do a Giallo Fantasia. You can get a slab of that 112 inches long for not more than about $159. And then you just bring in your contractor, have them cut it up, glaze it up, put a sink in there. And if you have them cut it the right way, this is a real tip. The square they cut out for your double sink, you can take that piece of granite, edge it off, and you can actually put that behind your range as a backsplash.
Yeah, that's
so now you've got that wonderful piece of material that you've harvested and recycled, not gone to waste. I mean, you can still use it as a cutting board if you want to leave it in the house, but that's typically that double sink is a large enough piece that you could take that out, have it hung right behind your range between the microwave or the range hood and your range, and have a beautiful backsplash right on the wall with that granite. It looks absolutely phenomenal.
And I'm glad you brought up sinks because this year farm sinks are popular. Do they help values?
It depends on the market area. It really does. Probably in Richmond, depending on the neighborhood, stuff like that, and the type of trims that you're doing in the home, the farm sinks, they come in handy. You'd be surprised, even in places like Columbia, South Carolina, where we've done a couple of deals there, where you would think, it's the South and so forth. Don't bring that thing in there. Don't bring that country sink in there. No, don't do it. Ironically, if you did it we just did a project up in East Stroudsburg, Pennsylvania, and we went with a farm sink there, but only because we looked at a lot of other listings to see what the other materials are. And that's one thing that's just off the top of my head. You want to be looking at what are the other finishes that are being done in the market area that you're doing business in. So without a doubt, be mindful of that. Don't just say, don't take your paint palette. I mean, we use a color called Gobi Beige. And in 90% of the market areas that we're doing, that color has held tried and true. I've done it from Denver all the way down to Tampa, Florida. And it's held out. We've done it even in Connecticut. We've used it. And that color has served us very, very well. Gobi Beige, really nice, warm, sandy kind of color, but not dark. But now we've actually shifted to more of a gray palette in some of the more urban markets because it's nice and clean. It presents really well. Even from the exterior colors, it still transitions well into the house. whether it's the kitchen, the bedrooms, bathrooms, whatever the case may be.
So we've been using, we were using agreeable gray, we were using grayish, and now we're using, I forgot, my wife does the colors, MJ. I have to look at my phone real quick. What color gray do you use?
It is a antique gray. Is the one we use.
Is that like a Benjamin Moore, Sherwin-Williams? What is that?
That is a Sherwin-Williams color, and basically it piggybacks.
Grays. I remember. Boy,
what
is it? Repose. R-E-P-O-S-E.
Yeah, it has some of the same hues in gray as French silver. So it's got that nice bright lightness to it. So if you look, it falls in the same palette, the antique gray and the French silver. French silver is actually a blue, but it's got this nice light feeling to it, almost like just inside of a beautiful cloud color blue is what it is. So it's really good.
How important is the square footage, the bedrooms, and the number of bathrooms? And if you have the opportunity to add a bedroom or add a bathroom, is it usually worthwhile?
For the most part,
within the footprint.
Right, within a single family, within the footprint, or doing an addition.
Nope, within the footprint.
Within the footprint, if you can add a bath, if nothing else, I don't care if it's a 2-bedroom, 1 bath, and you can add a bath, that's great. If it's a 3-bedroom, 1 bath, and you can add a bath, get the plumbing to work, add that bath. Even more so than expanding the kitchen, add that bath. We're looking at a project right now we're doing here in Denver, and they closed in the garage years ago and made it somewhat of an elongated family room / office type thing. The house is only a 2-bedroom, 1 bath on the first level. It does have a full basement. But what we're doing, we're looking at taking that garage because it still has a foundation underneath it. Actually, there's steel I-beams. So we're going to turn that into an owner suite, and we're going to add a walk-in closet and a bath, but we're putting the bath on the back side of the kitchen because that's where we can reach the plumbing. So always, wherever you can add a bath, that's going to be the most.
We did the same thing at the beginning of this year. We bought a house that had a garage, and none of the other houses in the cul-de-sac had garages. So we took that garage, we made it the 4th bedroom. It was the master bedroom. Put the bathroom in the back with a walk-in closet, sold just like that.
Absolutely.
4-bed, 2.5
Which is it's surprising that you wouldn't have a garage because it gets kind of. I mean, Richmond doesn't get cold.
No, but I want a garage. But that's just me.
Exactly. I mean, you'll see some snow in Richmond,
a little bit. Not like Denver, but more so than Atlanta.
No, Atlanta, you need a garage just so you don't have to be hot outside when you're coming into that.
Well, I'm originally from Buffalo, that Western New York area, so I know what snow is, 200 inches a year. Maybe not as much as Denver, but
yeah, well, at least it melts fast here, though.
That's true, it does. All right, we're going to go ahead and close up. But do you have any final thoughts on value adds and making sure that you got your comps right and things like that for our success listeners today?
Well, one of the things that I would encourage people to do, always look at the land and how it lays on a particular property. When you're talking about doing a transaction where it's not a long-term hold, it's one you're trying to get in and get out of. Make sure you're looking at what are the ingress and egress. If it's a house that's sitting down in a lot, at least make sure that the backyard has some level to it so that when you have a family come there, the kids can go out and play. If you have a steep driveway, that can be manageable. But if you don't have a backyard for family, if the numbers are right, it's a 4-bedroom, 3-bath. It's only built in 2008. It's easy to work with. It's got a garage, for goodness sake. Right. But they've got a deck that's on stilts and the kids can't go outside and play. You're minimizing the marketer you could sell to. So just as a closing tip, we're seeing this where that's just not a deal that even though the numbers are absolutely perfect, your marketing time is going to be extended and the pool of buyers that you have are going to be shrunken. So both those two dynamics are going to put you in a situation where you may or may not be able to market that property very, very quickly because it's just a situation that you can't overcome. If, in fact, you have enough money in your budget, you're acquiring at a low enough price that maybe you could slap in a retaining wall and level out and bring some soil in, whatever the case would be, and you can overcome that, then fine. But if you're looking to acquire and just going to run with the land as it is, I highly encourage you to be careful and look at how many transactions are taking place, what type of transactions are they, and make sure if they're on similar lots as the one that you're buying. If it's a normal condition, just make sure you have your eyes wide open.
All right, great tips. MJ, it's great to catch up today, and I really appreciate your being with us. That is it for this very special episode of the Investor Success Podcast. We'd really appreciate Mark being with us. Check out his website at investorcompsonline.com. I highly recommend it. Thanks to all of our regular Success listeners for tuning in today. It's been fun to spend this time with you. Again, my name is Jim Ingersoll, and I get to be your host for this podcast. Make sure you get out there and invest. You got to get these comps right so that you buy the right house for the right price. Don't overpay. Make sure you buy the right house in the right neighborhood, and you can do extremely well in today's market. Thanks, everybody, and we'll see you again next week.
Thanks for joining us today. Be sure to share this podcast with your friends and social media contacts, and visit us online at www.bigmoneyinvestor.com.